Welcome to the first part of a video series in which we are going to go from the ground level up to having a strategy that returns results like the ones behind me. From going from having no idea what you're doing to building a profitable strategy. And I'm going to walk through every single step along the way in this video series with you. This is going to be a 5-part series in which we talk about the things listed here. We're going to go from how to theorize a strategy, how to build scanners that return the stocks you want to trade according to that theory, obviously how to build the strategy itself, and then how to go about testing that it works both in back testing, and then how to go about testing that it works in real money trading. Today, we are going to start with part 1, theory crafting. And before you try to skip to the next video right away, please, I implore you to stay with me for this part. Everybody thinks that they have their theory crafted. Everybody thinks they know what kind of trader you are, but I promise, unless you are already a very profitable trader, there's a good chance that you don't, and there's a good chance that this first video in this series will be the most impactful, so please stick around. If I showed you this daily chart and asked you to pick an entrance, either long or short, which one would you choose? If you said short, congratulations, this is the top of SPY. This is the top of SPY going into 2022, right before the bear market. If I showed you this daily chart and I asked whether you would enter long or short, which would you choose then? If you chose long this time, congratulations. This is once again a chart of SPY from 2013, and it just continues moving up 10, 15, 20% more. In that one simple exercise, you just learned something about yourself as a trader. You just learned how you look at the market. You just learned whether you are a reversal trader or if you are a continuation trader. And in either one of those examples, there was no right or wrong. Both of those chart setups, I did my best to pick two that were very similar looking. Where we're going to go from here is talking about building risk reward, building outcomes that you are looking for. But this is the best place to start from. Knowing whether you are a reversal trader or a continuation trader, knowing how you see the market. If you begin to build trade theories from how you see the market the best, those are going to be the types of strategies that you are going to have the most confidence in, that are going to work the best for you. If you do not already have proven statistical advantages against the stock market, then make sure you check out my website, daytradingstrategies.net. Link at the top of the description down below, where you can get access to all of my custom strategies, scanners, and indicators. Let's talk next about market structure and how your statistics are going to be impacted by the way you choose to trade. You just learned whether you are a reversal or a continuation trader, but those are two obviously very different things, not only in the way you see the market, but also in how your statistics are going to look. Very typically a reversal trader, so someone who is looking to potentially go long during the bottom of COVID or high during one of these peaks right before a bear market, those are going to be a higher win rate strategy. Once again, typically, not always, there's no such thing as always, but typically higher win rate, but a worse risk reward. You are having a wider stop loss. It's much harder to time a reversal, right? Because, I mean, it looks easy on the chart. Well, I would have just bought here. Well, what if you ended up buying here? You know, what if you bought here and you needed to hold through all this before it got back to profit? That is a very typical of reversal traders. So it's typically higher win rate, lower risk reward. And let me start from there at a basis as well. I have heard gurus and other YouTubers, this, that, and the other. I'm not going to name any names. This isn't a shit on competition, but I have heard people say you should aim for a 75% win rate and a 3-to-1 risk reward. I'm not here to bust any bubbles, but unless you have solved a secret of the market, which can be done, but if you do, they usually go away very quickly. That's part of market efficiency. If you do find one of those crazy secrets, the market will find it and it will disappear. But at a real statistical trading advantage over the market. That doesn't exist. You are not going to be pulling a 3-to-1 risk reward at a 75% win rate. It's just not going to happen. Your goal in developing a strategy is to find any small edge you can over the market. I'm talking, if you're trading at a 2-to-1 risk reward, 50% is break even. So if you're trading at a 2-to-1 risk reward, you're looking for 65% win rate. We're not looking for anything crazy here. The market is just hyper efficient. You all know that. You know the market is hyper efficient. This is not get rich quick. If just 75% win rate at a 3-to-1 risk reward, look at how much money you can make. No shit, but it's not realistic. It's not something you can actually do. So when I'm talking about my numbers like this, I want you to keep that in mind. So as I just mentioned, a reversal strategy, higher win rate because you are going to be getting in. I mean, it's buy low, sell high, right? Okay, the market's dipping, buy low, sell high, but worse risk reward because you have to typically let the trades breathe a little bit more, and you have to be more willing to take profit when it shows. Because if you are bucking the trend, if this is in uptrend and you want to short, you are bucking that trend. So when you get in profit, you're going to want to lock the profit faster while giving the ticker more room to breathe against you. And obviously, as a continuation trader, if you are a continuation trader, you get flip side of that, right? You might get a lower win rate, but you can get a much higher risk reward because you can let the trend continue to play. The trend is going in your direction. You can have a much more defined area. Say you want to play off this. If you want to buy this dip, you have a much more defined area where you're going to get stopped out. So you don't have to give the stock as much room to breathe down. And when it begins winning, you are following the trend. So you can allow the trend to continue. You can allow the trend to continue running. So you might have a lower win rate. You're looking for 40-50% win rate as a trend continuation trader, but you might be able to pull that 3, 4, 5-to-1 risk reward off where you really can't as a reversal trader. And that's very important to understand because that's going to have a huge impact on your trading psychology and your trading emotions, right? Can you handle having larger winners than losers? Can you handle having a win rate under 50%? You don't have to win most of your trades to make money. There are plenty of traders out there making bank on 20% win rates, right? But they're trading at a 10-15 risk reward. They're doing crazy stuff like that. You need to figure out which way that is going to fit your emotional state the best. And I don't have an answer for you. There's no just, you should do this and you'll make money. You have to find what works best, because what you can't do is be a continuation trader that trades the market structure of a reversal trader. You can't be a continuation trader mindset that is allowing his losers to be bigger than his winners, his or hers, to be bigger than his winners and trading at a high win rate. That's not continuation trading. You are trading continuation market structure, but you're trading it with a reversal trade pattern. Doesn't work. And obviously vice versa the same way. You cannot be a reversal trader who is trading at you're trading at a really low win rate, or you're trading at a area in which you are trying to let your winners run way too much. You have to understand that you're a reversal trader. If you are bucking the trend, if you are looking to go short here, when you get profit, you need to be able to lock that profit. You need to be able to take that in, not swing for the home runs as much. So with all that being said, all of that should go into, we just helped you define whether you are a continuation or a reversal trader, but you also need to think about your own emotional control, how you want to trade, what you want to get out of trading, your needs out of trading. Really, if you want to trade more full time, you might need a little bit more consistent income, which is going to determine how you trade. Whereas if you still have a full-time job and you're trading, maybe you still want to make trading your career, but you don't rely on it as much, you don't need as high of a win rate. You can swing for those bigger wins. It's going to lower your win rate, but that's okay. You still have consistent income. You don't need this income. So take that Barry Bonds hacks at the plate, swing for the home runs. You know what I mean? All of that is stuff that you need to consider. And please, I would love to hear your thoughts in the comment section down below. Help each other out. Let me know your thoughts on it, because I can't give you the answer to that. That's something you have to figure out yourself, but it's very important to understand the two main types of trading, the market structure that comes with those types of tradings, and how those market structures are going to fit into your personal needs. That does it for part 1 of the video series. You guys make sure you're subscribed so you don't miss the parts upcoming in which we're going to dive into the maybe more fun stuff, what you're probably really here for, the strategy creation, the back testing, all that kind of stuff. But this part was very important. You must understand how to properly create a trading theory before you will ever be successful with the next step. So hopefully you still got some value out of this video. If you did, make sure you hit the like button. Once again, make sure you're subscribed and check out the link at the top of the description if you would like access to all of my already proven strategies. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.